Hey there, Tigers. My name is Kaitlyn Goslinga, and I'm the Senior Assistant Director of Financial Aid here at Pacific. This video is going to cover everything you need to know about how to understand and apply for student loans. So a couple things we're going to hit today. If you see any topics that pique your interest, go ahead and scroll through the chapters. But we're going to cover our philosophy regarding loans. Believe it or not, we have one of those. And then from there, we are going to go into the nuts and bolts regarding federal student loans, federal parent loans, how interest accrues, the pros and cons of private loans, and then from there, loans for grad professional school, and last but not least, loan repayment. So a lot of topics to cover today, but by the end, you'll have everything you need to know about all of your loan options. So a little bit about Pacific's loan philosophy. We believe that borrowing student loans can be an investment you can make in your future. Now, we totally understand that maybe borrowing for the first time can be a little bit scary, right? You might be worried about repaying those loans or interest accruing. We get it. That's really, really scary, especially if you've never borrowed before. But here's some things to hopefully help keep that at ease, right? Help you make a good borrowing decision. According to a study by Georgetown University, Pacific's graduates actually earn the second highest salaries compared to other institutions like ours. And along with that, our student loan default rate is at 0.5%. So most recently from those student loan default rate statistics, what that says to us is that most of our borrowers are having no trouble at all keeping up with their loan payments. Compared to other private four-year institutions, that rate is about 1.7%. So we're doing much better there compared to other institutions like ours. And on top of that, we offer loan repayment consults to our borrowers to help you understand the ins and outs of student loan repayment. So the first type of loan available to students are federal undergraduate loans. To be considered, you do have to be eligible and choose to file a FAFSA. This is the free application for federal student aid at studentaid.gov. There are two different types of undergraduate loans, subsidized versus unsubsidized. Now, a subsidized loan actually does not accrue any interest while the student is in school. Federal government is paying that interest for you. But to be eligible, you do have to demonstrate financial need based on a review of your FAFSA. The other type of loan is unsubsidized. Now that loan does start to accrue interest from the point the loan disperses to your student account. It's going to pay to your student account on the first day of classes each semester. Now, when it comes to the interest rate, that is something that changes each and every year. So we're going to go ahead and link the current interest rates below. Now, payments, you never have to make payments toward federal loans while you're in school. Payments officially start 6 months after graduation, and that's even the case if you go on to graduate or professional studies. Now, the next question is, how much can students borrow each year? So as an undergraduate student, there are actually limits to the maximum that you can borrow in federal loans each year. So take a look at this chart. We've got first year students. If you are dependent, meaning you've got to include parent information on your FAFSA, first year students can borrow up to $5,500. Moving on, second year students or sophomores who are dependents can borrow $6,500. And then as you move on to your third year, so your junior or senior year and beyond, you can borrow up to $7,500 per year. Now, if you're an independent student, meaning your parent information is not required on the FAFSA, maybe due to your age or another circumstance, you can borrow a little bit more at a higher level each year. First year students, $9,500, second years, $10,500, and then third year and beyond up to $12,500. So those are the yearly maximum limits no matter what school you go to across the country. Now, if you were interested in borrowing your loans, there are a few steps to finalize the loan process. So first thing, you need to accept your loans through My Pacific, and we'll show you how to do that in a moment. From there, you need to complete a master promissory note. That is just a fancy term for signing and agreeing to the terms and conditions of the loan. And then the last document is called the Loan Entrance Counseling, and that is a really helpful tutorial to complete as a first-time borrower. Couple things here. You have to re-accept loans every year. So if you plan on borrowing each year, you need to re-accept those funds through My Pacific. However, you only need to do the master promissory note and loan entrance counseling once, because those are good for like 10 years. All right, so a couple steps to accept your loans. First thing, you need to log in to my.pacific.edu, and on the left-hand bar, you're gonna see the Tools section. From there, you're gonna select the Self-Service menu, and then click on the financial aid icon. It's gonna be those little dollar signs there. Financial aid may already be under your Shortcuts tab as well. And then from there, you're gonna navigate to the heading that says View Your Financial Aid Award. So you'll click there. And then you need to tell the system what financial aid year you wanna look at, because eventually you're gonna have a couple years worth of information. So you're gonna click on Award by Aid Year. And then in the drop-down, you are gonna select the aid year for which you are accepting your loans for. Then from there, you're gonna be taken to one more section. Up at the top here, you'll see a few tabs that say General Information, Award Overview, Resources, and then Accept Award Offer. Click on that fourth tab of Accept Award Offer. And then from there, you'll see a drop down that looks a little something like this. Every student's page is gonna look a little bit different. This is simply an example of a past graduate student, but for our undergrads, you're gonna see your merit scholarships, you'll see any eligible grants, maybe work study, but also your federal loans are going to live on this page. So you can see that drop down to select decision, where you can go through and indicate whether or not you plan on borrowing. At the very bottom, if you want to make things simple, you can simply click on Accept Full Amount of All Awards. From there, you're going to navigate to studentaid.gov. That is your landing page for all things related to your federal aid, and it'll look familiar to you if you filed a FAFSA. You're going to want to click on that Loans and Grants tab right up at the top. From there, you will be navigating to complete the master promissory note as well as the loan entrance counseling. So both of those links are under that Loans and Grants tab. Should take no longer than probably an hour or so to complete both documents at most. The next type of loan, if your family was interested in borrowing additional loan funds, because remember, students are limited with how much they can borrow each year. So if you are in need of additional loans, then we either need to look at a federal Parent Plus loan or perhaps a private loan. So first thing, Federal Parent Plus loan is a loan that's in the parent's name. So parents, you are the one that is applying for this loan and logging in at studentaid.gov. There is a credit approval that's required. That application launches online each year, April 15th. So save that date if you plan on borrowing a plus loan. Parents, if you were approved, you can borrow up to the entire cost of attendance for the academic year. So that means anything remaining that is not covered by your student scholarships, grants, and their student loans can be paid for by the plus loan. So remaining amount for tuition, living expenses, meals, as well as books and supplies and other miscellaneous and personal expenses. This loan does accrue interest while the student is enrolled. So it's just like the student's unsubsidized loan. But just like federal student loans, payments are deferred or can be deferred until 6 months after graduation. Parents, if you are approved, you also need to complete a master promissory note as well. And then with the interest rate, again, this is something that changes every single year. So the interest rate is fixed for the entire life of the loan, but with each new academic year is going to come a new interest rate that's tied to that specific loan. So go ahead and check out the link below if you want to review current interest rates. Here are the very specific list of credit requirements. The Federal Parent Plus loan, it doesn't look at your income. It doesn't look at perhaps your credit score per se. It looks for what the Department of Education defines as an adverse credit history. So within the past 5 years, if you've gone through a default, a bankruptcy, foreclosure, tax lien, repossession, wage garnishment, or a student debt write-off. Or more recently, within the last 90 days, if you have had a collection balance greater than $2,085. So again, looking at a very specific set of circumstances within your credit history. If none of those things look familiar to you, then the odds are you would be approved for the Plus loan. However, if your credit is denied, you do have some options. Number one, you can appeal the decision with direct loans. So if it's a mistake in your credit profile, or maybe it's something that you have squared away, you can appeal that decision. Number two, you can reapply with an endorser, right? Same thing as a cosigner. If that cosigner is approved, then you'll be able to borrow the Plus loan. On top of doing the master promissory note, you also will need to complete the Plus loan credit counseling, also found at studentaid.gov. Another option, or essentially the third and final option, is you could choose to increase your student's unsubsidized loan by $4,000 to $5,000 depending on what their grade level is. So you'll be presented with these options after the credit check has been completed, and you'll know immediately after you've applied for that loan if you've been approved or denied for it. Here is where to find that application at studentaid.gov. So same place, loans and grants, you'll hover over that tab and you are going to look for the Plus loan application. You'll see parents listed there. And then you're also going to need to complete the master promissory note. So same link, and then you will indicate that you are completing it as a parent. So let's talk a little bit about how these loans work, right? We often get the question of how interest accrues on federal loans, especially when students have some hesitancy regarding borrowing. So we'll show a little bit about how maybe it's not quite as bad as you might think when it comes to the interest. So interest is going to accrue on the unsubsidized and Parent Plus loans for the portion that pays each semester. So you might accept your loans for the entire year, but when the fall portion pays, only the fall portion will start to accrue interest. That spring amount that we haven't gotten to quite just yet in the middle of the academic year won't start to pay until the spring semester. And it's actually a simple daily interest calculation. So that's the type of interest calculation that we want when you've got to pay money back. It's different from compounding interest, which is what you want when you invest money and you're trying to see your money grow. So here's an example. A first-year student, let's say they borrow $2,000 in the unsubsidized loan at around 6.5%. You're going to take the interest rate, kind of defined by that decimal there, divide it by 365 days, right? How many days we have in the year. From there, you're then going to multiply by the loan amount, right? $2,000 for the year. And so as you can see, on a $2,000 loan at 6.5%, that accrues only 35 cents per day, right? Not as bad as you might have thought. Go ahead and take that 35 cents per day and you are going to multiply that by the number of days in the year, right? To get an estimated amount. So it's about $135 a year. So not quite that bad if you break that down. And especially too, when you think about what you might be spending money on already, definitely can be a worthwhile investment to think about borrowing for your education, especially knowing the salary that you may have after graduation. This interest that's accruing, it's not going to capitalize, meaning be added on to the principal that you borrowed until loan repayment begins. So that means if you can pay down any of the interest while you're in school, even if it's $5, $10, $20 a month, that can definitely help save you money in the long run when loan repayment starts. Now, the other type of loan to consider would be private loans. These are offered through a bank or a credit union or maybe another financial institution. So a private loan differs from the parent loan in that the student is the applicant, but they're going to need a cosigner to be approved. So this might be a parent, or maybe students, you've got another supporter in your life, someone else in your network that's willing to cosign on that loan for you. In that case, maybe looking at a private loan, especially if your parent is not able or willing to borrow the Parent Plus loan, could be an option. A quick web search is going to give you quite a few different private lenders. Legally, we can't make really specific recommendations, but again, do a quick search. You're going to find quite a few options. And look for the one that's going to offer you the best terms and conditions, right? The lowest interest rate, or maybe the most favorable loan repayment terms when that time comes. But really read that fine print and make sure you understand the terms and conditions thoroughly, because private lenders set all of their own rules and regulations. So that means they may not be as flexible when it comes to loan repayment, or if you need to pause making payments for any reason. They oftentimes can be a little bit different than the conditions offered with the federal loan program. So really make sure that you know what you're getting into if you decide to go the private loan route rather than pursuing federal loans. Now, when you move on to graduate or professional school, you might ask what type of loans are available to you. And there definitely are federal loan options at the graduate and professional levels. So as a first-year graduate student, typically most can borrow up to $20,500 in the unsubsidized loan. And there is also a similar loan like the Parent Plus loan, but it's called the Graduate Plus loan, that is offered up to the remaining cost of attendance. So students, what that means is you can borrow to not only cover tuition and fees, but also for room and board, books and supplies, personal expenses, especially if you're looking at a graduate program that might be kind of demanding, meaning you can't hold a job down while you are in school. So those loans can definitely be a great way to get those costs covered while you're in your graduate school. All right, let's talk a little bit about loan repayment. So like I mentioned earlier, you don't need to start making payments until 6 months after graduation. However, there's no early payment penalties with the federal loan program. So that means you can always pay when you're in school, during your grace period, when you don't have to. You can always make payments toward those loans. There are flexible income-based repayment plans available. Typically, plans can extend up to 25 years if you need a bit more time to pay off your loans compared to the standard 10-year repayment plan. So you definitely have some choices if the standard 10-year plan isn't the right fit for you immediately. There's also opportunities for forgiveness for those that are going into public service. So if you're going to work at the government levels or for a nonprofit, or perhaps for those that are considering teaching, there's a specific teacher loan forgiveness program as well. And when graduation time comes, our office offers personalized counseling and an overview of your repayment options, if that's a resource that you want to tap into. If you have any questions today, please do not hesitate to get in touch with our office. You can reach us by phone or by email, 209-946-2421. or financialaid@pacific.edu. You're also welcome to stop by our office in Knowles Hall. We know that student loans can be kind of scary, right? We want to help you understand your options and make a good choice for you and your family. As a quick disclaimer, these are federal loan funds that we're discussing. And so at times, federal policies can change. As of the date of this recording, these are some of the options that are available, but please do keep in mind that things can change. A great place to stay updated is at the studentaid.gov website. Thanks for tuning in.